Major order types for entering and exiting Forex positions include market orders and limit orders. Market orders attempt to execute at the best available price. While this order type can help to buy or sell relatively quickly, the price can vary widely from second to second in volatile markets. Limit orders execute at a specific price sometime in the future. While this order type helps to buy or sell at a desired predetermined price, it might not get filled if the market does not reach said price. Stop loss orders attempt to close positions at a specific loss level. Ideally, they trigger a limit order at the chosen price after that level is breached, but they do not guarantee a price, especially in high volatility, low liquidity environments. Take profit orders attempt to close positions at a specific profit level. They intend to trigger a limit order at the chosen price after that level is breached. Stop losses and take profits are often seen as risk management tools to help mitigate large losses and lock in consistent profits, and they may be entered upon order entry or during the life of the trade.
How do I start? Find out more about Forex trading from our website or create an account with tastyfx and start trading Forex today.